Well, good evening, ladies and gentlemen. Welcome to part 4 of our Power Options for Radioactive Traders series. Tonight's presentation, we're going to focus on using the Power Options portfolio tools to track, manage, evaluate income methods on the RPM, as well as, of course, create portfolios from scratch. We're going to do that first to go through just the basics of setting up the portfolio. We're also going to take a little side trip very quickly at the beginning. We're going to showcase just a quick historical search. I'm going to do that for one specific reason, which will become apparent later on. As always, with our Power Options for Radioactive Trading series that we're doing this month, I want to encourage you to ask questions as we go through the presentation. I'll try not to get too distracted on that. We want to go through the whole presentation. We want to make sure we get through everything we have planned for this evening, but I also don't want to leave anything out there on the table. I want to make sure we handle all of your questions as we go through. I am flying solo tonight, of course, but that shouldn't stop us from getting all the questions answered and getting all the materials and getting everything you need to help you use the portfolio tools for your radioactive trades. For those of you, of course, who are joining us this evening who maybe aren't using the radioactive trading techniques and you're doing different strategies, this is going to benefit you as well, because everything that we're going to go through today is also going to appeal to the other strategies that you might be trading, whether you're doing covered calls, whether you're doing maybe just long calls, if you're doing calendar spreads. The functionality that we're going to show this evening is going to cover that as well. All right, well, let's go ahead and just review quickly, of course. We'll start off with these first two slides. What is radioactive trading? Well, it's a limited risk approach to trading and investing. It was developed by Kurt Frankenberg back in about 2000, 2001 after he had lost his money. He attended a weekend seminar to learn how to do covered calls. Very shortly after that, he followed his guru's advice and he ended up losing all of the money he had set aside for trading. But he didn't give up. He started researching the market, and he developed a methodology where we're going to use in-the-money put options that are far out in time as guaranteed protection, not speculation. The positions we enter, of course, have a limited downside risk, unlimited upside profit potential when the position is opened. And then after that, what we're going to see tonight is there are 10 different income methods that are then applied to lower the risk, potentially bulletproof the position. Bulletproof means when our guaranteed exit is higher than our cost basis into the position and potentially earn extra profits. The full technique and the income methods are only discussed in the blueprint, and that's Kurt's flagship product at radioactivetrading.com. You can also read more about it at PowerOpt.com on Power Options. Power Options, of course, is a patented suite of search and analysis tools designed for self-directed options investors. These tools allow you to search across the universe of options to identify only those positions that match your criteria. This, of course, was covered in Part 1 of our Power Options for Radioactive Traders series. That's archived in the webinar menu, the webinar page. We'll take a look at that later on. Once you've identified the position, you can quickly compare the risk versus reward, run what-if scenarios, and catastrophe report. That's what we covered recently, last week, on the Research and Analysis Part 3 of our presentation, which is also available in the archives now. Once you've identified the positions, run your what-if scenarios, compare the risk versus reward, you then use the portfolio tool to paper trade, track, and manage your positions, and that's what we're going to cover this evening. And of course, as you know, we also offer countless educational articles and help pages, and we've been in business for over 13 years. I always keep forgetting to update these slides. We've been in business for over 13 years, and everyone here on staff uses the Power Options tools for their trades. Now, who am I and why am I presenting to you this evening? My name is Mike Chupka. I'm the Director of Education here at Power Options. I had the great pleasure of working with Ernie and the Power Options staff for the past 8 years. I handle all of the coaching sessions. For those of you who are on a free trial or are subscribers to Power Options, you know that you can sign up for those free trials. They're completely free. You can schedule as many as you like. There's no limit to those. I also handle a lot of the education on the site, the webinars, some of the blog articles, of course, some of the help pages also. I've co-authored 2 books on options investing. I've helped Ernie and Kurt, of course, edit the material in the blueprint and add new material as new ideas come up. I am versed in all strategies on Power Options, but there are certain strategies I do not trade in my personal account. Things such as iron butterflies, short straddles, short strangles, and naked calls. They don't match my personal risk-reward tolerance, so I don't use those strategies. But I've been trading radioactively for almost 3 years now. It's over 2.5 years. I entered my first RPM in April about 3 years ago. So we're coming up on my 3-year anniversary of trading radioactively, and I've had some great success with the positions. Many of you have seen recently the silver Wheaton position I had as an RPM, which allowed me to have a limited risk position and eventually have a 59.8% return after a 7-month period, I believe it was. My first RPM I was referring to that I opened in April 3 years ago, I watched the stock drop 75% from where I opened it, and I ended up closing the position for a profit, even though I was long stock the whole time. So this method has worked for me. I do trade other strategies in my portfolio as well. All right, well, let's get down to it. What are we covering this evening? We're going to cover the functionality of the portfolio tools, and we're going to follow this guideline that was in the email and that was in the webinar sign-up page there, almost to the letter. We're going to talk about creating a new portfolio from scratch, okay, just how to create a new portfolio and then how to enter positions manually. We're going to talk about how to enter positions from the search tools, the search by symbol tool, or manually enter your RPMs, either from a portfolio you've already created or if you just created a portfolio from scratch, for example. Once we've gone through that, we're going to talk about evaluating the positions using the position analysis and liquidation for an RPM, a radioactive profit machine. And then we're going to showcase using the position analysis tool to evaluate income methods and adjustments on your positions. This, of course, is also going to allow us to link to the Simulate Trade feature where we're going to be able to apply the SIGA model that's discussed in the blueprint for each of the 10 income methods. And we're also going to talk about, after that, well, what happens if you go to the position analysis screen, you look for a rollout opportunity on your RPM, you don't see one that you are thinking about. Well, we're going to show how you could use the profit and loss chart on PowerOptions from the portfolio tool to help evaluate your income methods as well. So that's pretty much what we're going to stick to this evening, and that's where we're going to start. Let's navigate over to the PowerOptions tools. Go ahead and take a look at how to use the portfolio tools. Now, as we discussed in our earlier presentations, whenever I'm doing the search or the analysis, we're going to start off in the Married Put tab. That's where we can access the search tool to identify positions. We can also use the search by symbol tool if we just want to look at married put positions, one stock at a time. We're going to look at the backtest in a few moments. There's a reason why I'm going to do that. And we're also going to look at the insurance tool, perhaps. But when you first log on to your PowerOptions account, as you know, it's designed by a tab navigation system. First thing I probably always do when I log on to PowerOptions is I'm going to go into the portfolio tool and I'm going to link to the profit and loss portfolio where I'm going to track my positions. My listed positions are there in the profit and loss portfolio. The historical reports will show that this evening as well. This is where you can see any of the adjustments you've made on your positions. You can look at the realized and unrealized gains over time for your portfolio. Some of you may have portfolios that you've been tracking for 2 or 3 years with PowerOptions. So if you want to go back and see past transactions, realized or unrealized gain and losses, you can view that in the historical reports. The analysis, I prefer to use the analysis menu when I'm looking at one position at a time, and of course I'll show you why when I go through there. The reason I like the analysis menu is the analysis tool here in the portfolio tools is arranged by stock symbol. The historical reports show us everything that we would need to see for the past history of our transactions, but it's arranged by the open date of the positions, where the analysis tool organizes everything by stock symbol. So I can see all of the closed and open positions I have on an RPM, or I can view the total positions of a closed RPM as well, the gains or losses I had on each adjustment. The snapshot view, this just gives you a quick overview of the positions that you have open right now. You can also use the allocation menu, kind of see where you are and where your positions are, your cash is allocated, for example, in what sectors or what industries. The alert summary, that's going to be very important as well. We're going to discuss that as we get into the evaluating the income methods portion. And the setup. And the setup is where we're actually going to begin right now. Many of you may have not created a portfolio, even though you have a portfolio of your brokerage house, for example, or you haven't created a paper trading portfolio yet. There are 2 ways to create a paper trading portfolio, really one way to create a real portfolio that you're going to use. And the first way, of course, when I go to my portfolio, first thing we're going to do is click on Setup. in the submenus in the portfolio tools. Now you see that I have a variety of portfolios created. I have a covered calls portfolio, credit spreads. Here's an IWM example that I recently did comparing a married put position to an in-the-money long strangle, supplementing an in-the-money long call against the married puts to see how those performs. There's one here for long options and calendar spreads. This was actually just created this afternoon during our introduction to PowerOptions presentation. We have a menu here for the My Married Puts. We'll take a look at that one. And here's one that was created after last week's presentation, after part 3 of our Using PowerOptions for Radioactive Trades Part 3. I went in and put a few positions into this portfolio, and we're going to talk about those in just a few minutes. And then, of course, I have some other portfolios here as well. Now, if this is the first time you've accessed the portfolio tools, the only choice you'll have, of course, is you'll just see this block here where it says New Portfolio. It has today's date and a 0 cash on hand and starting basis. So if you're creating a new portfolio, whether it's a real portfolio or a paper trading portfolio, that's where you're going to start. To begin, let's go ahead and do that. And what I'm going to want to do, we're going to create a new portfolio called Paper Trades. Okay? So go ahead and just call this Paper Trade Portfolio. And if I'm just creating this from scratch, I'm going to want my cash on hand and my starting basis to be equal. So let's just start off, let's say, with $50,000. And then I'll click the little blue button here from cash on hand to starting basis, and then I've got my my starting basis date as well. All right. Now I can go ahead and click Submit Changes, and then I'll just create a paper trade portfolio for me. It's now available with these other portfolios. This is just in the setup view. Now, let's say that you have an existing account at your broker. And right now, you may have a couple covered call trades. You might have a couple long stock positions. And you might have 1 or 2 married puts that you opened. Now, how would we create a portfolio based on that? Well, the first step is the same way we just created that paper trade portfolio. I'll go into the setup field here, and on the new portfolio box, once I submitted the paper trade portfolio here, we have another new portfolio listing for us. And what I'm going to do is we'll just call this Portfolio Actual. Now, I haven't entered any positions into the portfolio yet, but I know, looking at my brokerage account, that my total value of my portfolio, if I liquidated all my positions right now, let's say that my total portfolio value is actually $68,770. So I'm going to use that to start with as my cash on hand and my starting basis. Now, in my real portfolio, my cash on hand might only be $22,000, and I've got $40-some thousand into those different positions. But that's okay, because to start with, I want the cash on hand and starting basis to be equal. For when I start entering in the positions into that portfolio, it's going to start subtracting from the cash on hand. So when you're opening a new portfolio, you're trying to mimic the portfolio you have at your broker, go ahead and just start it this way with having the cash on hand and starting basis equal. And of course, we're going to leave the starting basis date as well. And then we'll just go ahead and click Submit Changes. Okay, so now we have a variety of portfolios created just from scratch, but we haven't entered any positions. How would I enter a position in either to my Portfolio Actual or into the new Paper Trade portfolio? Well, to do that, your open positions, the positions you have that are still open, are tracked in the Profit and Loss portfolios. So let's go ahead and click on Profit and Loss portfolios. And this linked us to the last portfolio we created. So up at the top, you see here that I have Portfolio Actual. I can toggle between my other portfolios very quickly. I'll just use the drop-down menu, and I could select to go to Paper Trade Portfolio or PO for Radioactive Trades Part 4. Or I could simply click Next or Previous to scroll through them alphabetically of the portfolios I've created. Now, over on the far right-hand side, you have your basic details for the portfolio. This was the actual portfolio. So we have our starting basis date of February 16th. We put in a starting basis price of $68,770 and a cash on hand value of $68,770 as well. I haven't entered any positions, any credit spreads, or any naked puts, so I don't have anything listed for the margin requirement yet, and my buying power is $68,770. That's not my actual account size, by the way. Those are just the numbers of my favorite two hockey players. So we have that listed there. All right, now, this is the actual portfolio. Let's say that in our actual portfolio, we currently had a covered call on, let's just say Fossil. It's a stock I've been tracking over time. How would I enter my covered call? Let's say I opened it on January 1st. How would I open my covered call into this menu? Okay, well, what we'll do is the second drop down we have in our profit and loss portfolio is enter a new position. And what I'm going to do is I'll click that drop down menu, and I can enter in position as a long stock, short stock position, long call, short call. So if I was going to enter a covered call, do I want to enter it as a long stock and a short call? No, I'm going to want the position linked together. So I'll select on covered call. And when I click covered call from that drop down, it's going to take me to an entry page where I can put in my values for the position. So let's just talking about Fossil, FOSL. Let's say I purchased 200 shares back on January 1st. And if this was a real trade, I'd put in my commissions. Let's say my stock commissions were $8.95 for 200 shares. And let's say I was able to purchase Fossil at the time at about $77 per share. Now, at the time I opened this position, or let's assume that 14 days later, that's when I sold the February call against the position. Okay, so 15 days later, let me change my transaction date. I'm going to go to 1/15/2011, but I need the option. So what I'm going to do is just click on Select Option, and this will pull up the chain for me. And if you don't see your strike, you can click on Full Chain. It starts with just the 5-strike call and put chain. I'm sorry, the 5-strike call chain. This is a covered call, so it automatically knew that I was looking for call options. So let's say, I don't know the actual price, but if the stock was at 77 and we sold a February 80 call, let's assume we sold the out-of-the-money call for maybe $1.50. So I'll just click on the text link for 80 strike call. Now what that will do for me, it filled in the price today over here in the price column because it's assuming I'm entering the trade now. But we're going to put in our price of $1.50. Well, I probably had the same number of contracts, 2 contracts. And now I'll put in my commission fee. Let's say my commission fee for options was $5.95. Now I have this position based on my entry. It's a historical position in my actual portfolio. Let's go ahead and click on Submit. And now I have a covered call listing. I have one covered call. We have our listing here is Fossil, 200 shares, our transaction date. Total price for the position was $15,409. Now the reason why it's a different price because I did buy 200 shares at 77, but we added a commission fee, so it rounded up to about $9 of a commission fee for us. My effective cost per share is $77, for I've made no adjustments on this position. Now on January 15th, we did say that we entered this 80 strike call for $1.50, and we sold 2, so our premium that we received would have been $300. But remember, we paid about $6 for commission, so assume we took in $2.94. Now the stock has moved up $2.09 from our purchase price, and my call has dropped 75 cents. Current price is 75 cents, and the stock is trading at 79.09. So I see here the gain on the stock and the gain loss on the call option. This is showing a gain on the call because it's gone in my favor. Okay, and so I see that individually. Chuck's got a question. He's one step ahead of me. Oh, Chuck, I was just putting in an example. I was just saying that let's say that was the commission cost for 2, that my values for 2 contracts was $5.95. Okay, so let's just go with that for now. It's not my actual prices, Chuck. We're just putting in examples. You'd put in your own commissions after you got filled on the trade, excuse me. Okay. Now, I can continue to add new positions, manual positions here as well. let's say that at the same time, I had entered in we'll do a married put on Dell, for example. Let's say back in January we did a married put on Dell, an RPM. And let's say, so I would just click married put from the select strategy in this actual portfolio. And I'll put in DELL. Now let's keep with that 200 shares. And let's say we did this back around January 15th. Commission fee again, $8.95. And the price per share, let's just use an average price of around $13. Okay? And at the same time, remember now we want to add our put, so I'd click select option. And let's say at the time we bought an August put, and let's say we bought the 15 strike put when the stock was at 13, and let's say we paid around $250 for it, maybe $265. Okay, let's use $265, why not? So remember I selected August from the tile menu. Now I'll select the 15 strike put and put in a price of 96 cents, but we're going to assume a price of $2.65. Plug in our commission fee. We would have opened this at the same time, so we'll use the same transaction date. And I'll put in my number of contracts as 2 as well. All right, now we'll go ahead and click submit. And the portfolio is now going to track these positions as linked positions. So as I view the position, I now have one married put, and it's linked. The stock, Dell, is linked to the put option, and then in my covered call, we've got Fossil, of course, linked to the 80 strike call that we sold. And again, as we saw with our covered call, we have our quantity and our transaction date, the total cost for our 200 shares of stock, the total cost for our put option. The stock has moved up $2.56. Naturally, the put has dropped by $1.74, or it's declined in price, I should say. So now we have a position. The stock's trading at $15.56, and the put has declined to 91 cents. Okay? And then we can see each leg individually gained 19.3% on the stock, and we lost 66% from the put option price. Chuck wants to know, will this effective cost per share change as we add and open and close legs? Yes, Chuck. Now you're 6 steps ahead of me. I'm not trying to make fun of you, but we're going to get through all of that. It's just a step ahead of where we are right now. We're going to get into that when we start managing and adjusting positions and look at an open position. No problem, Chuck. It's just one of those things. We're still following the rules there. Or, I'm sorry, we're following the outline that we set up. Okay? So here's our real portfolio. And we're just adding in the positions as we might have in our account. And as you notice, what's happening? Well, our cash on hand is dropping based on the value we have in the positions that we entered historically. The starting basis essentially still remains the same because this is when we first programmed in that portfolio value. And of course, our buying power has changed as well. And we can see the minimum return. Now, many of you who have attended webinars before notice that there's something missing. It's kind of nice to see everything individually. Okay, well, how has my stock moved? How has my put moved? How has my stock moved on the fossil position? How has my call lost for this covered call position? Of course, everyone here knows that joined me for a webinar before that I really don't trade covered calls ever by themselves. I only do standard collars, or I do covered calls in the context of an RPM. But one thing that's missing is, how do I see the position as a whole? It's great to see that my stock has moved up on both of these positions, and in one case my call premium has declined in my favor. In the other equation, the put premium has dropped. My insurance policy has declined as the stock moved up. But how does the position look together? Well, to do that, notice over on the right here in the main portfolio, you have selections to have the portfolio emailed to you daily or to view the position analysis. What I'm going to do is check that box for View Position Analysis, and it's going to add 6 extra columns on the right-hand side for us. Okay, so we're still in the same portfolio. Here we have our individual positions, but now as I scroll over to the right, the top position is Dell, and we see my total position cost of stock plus put was $3,145. Now, my expected gain or loss is NA. Why is that? Well, remember, when we open a married put, we essentially have an unlimited upside profit potential. Okay, so we can't calculate a percentage return. If I liquidated the position right now, our next column, what we're seeing there we go. What we're seeing there in the liquidation value, if I sold to close the stock and sold to close the put, I'd have a value of $3,279. So right now, after about a month in the trade, in the RPM, we could liquidate for a gain of $134 or 4.3%. Now we also have an expiration value and an expiration gain or loss. The expiration gain or loss and the expiration value is not projecting where the stock's going to be. In the case of the married put, we bought an August put on Dell, and in the case of the fossil position, we have a call expiring in February, and it's expiring in 2 days. What the expiration value is showing us here is if the stock stays at the same price it is right now, if Dell stayed at $15.56 all the way to August expiration, our expiration value would be $3,103. Our put would expire worthless, and we could sell to close our stock for $15.56. So we'd have a loss of $42 or 1.3%. Again, that's assuming that we hold it to expiration, the stock's trading at the same price, and we make no other adjustments. For our covered call, if we bought to close the call and sold to close the stock, well, our original position cost first was $15,115. Our expected profit, if the stock was trading above $80, would be 5.9%. If we liquidated right now, sold to close the stock, bought to close the call, our liquidation value would be $15,653. So we'd have a gain of $538 on the position, or 3.6%. And if we hold the position to February expiration 2 days from now, and the stock's trading at the same price, $79.09, we'd have a gain of 4.7%, or $703. We wouldn't realize the 5.9% total profit unless the stock was trading above 80 at that time. Yes, Chuck says he likes that feature because it makes it easy to gauge if your liquidation gain or loss has reached your maximum risk, if you're right at that line, or if you've reached your goals. Whenever we open an RPM, we have a SIGA model for the RPM as well as the income methods. So if my goals are to average, let's say 2.5–3% per month on my RPMs, my radioactive profit machines, if in those first 30 days I've reached a 5% gain because maybe the stock jumped up 8%, I might just liquidate the RPM right now. I might not even bother with an income method. I might just take my gains and then move on to the next position. But that's an excellent point, Chuck. I highly recommend. I know it adds 6 extra columns to the side. I know it's a little bit more material, but I always recommend selecting this View Position Analysis menu. Rick wants to know, what is SIGA? Well, remember, Rick, what we're presenting tonight is using the PowerOptions tools for the radioactive trading techniques. I wanted to show a little bit here on the covered call so you can see how to use a portfolio if you're doing other strategies. SIGA is the 4-step model that you use when you're opening an RPM or when you're looking to apply one of the 10 different income methods. It's a decision matrix, and SIGA is an acronym. It stands for Conditions, Expectations, Goals, and Actions. And whenever you enter an RPM or you're looking to apply an income method, you want to have written out what is your SIGA for the position and what is the SIGA for your income methods. And we're going to go into that when I go to the position analysis menu in a little bit. And that's all right, Rick. No problem. Just keep asking those, keep sending those questions. Even if you haven't read the blueprint yet, then I'll still answer them. I'll still answer your questions, and I'll tell you where in the presentation we're going to start addressing those. Okay, so that was just a very basic introduction there of creating a portfolio from scratch in the setup, entering positions manually once you've created a portfolio from the portfolio menu, your historical positions, and then, of course, adding the View Position Analysis to view those extra links so you can see where the positions are as a whole. What was your original expected gain or loss on the position? What's your current liquidation value? And what's your future expiration value, assuming the stock stayed at the same price and you made no adjustments. And we'll talk more about that in about 15 minutes. Okay, now we had also discussed, hey, I created a paper trading portfolio. What do we do with that? Well, with the paper trading portfolio, I mentioned there are 2 ways to create one. We did one manually. But let's skip now out of the portfolio very quickly, and we're going to go into the Married Put tab, and we're going to go into the search screen. We're going to pull up a search for our radioactive profit machines. And let's see what's available today. Now, the results that I have here are based on that same search criteria that we were playing around with last week on the 8th. Okay? But we have some different positions in here. Last week we were analyzing RPMs on Verigy. We looked at CarMax. We looked at Valero a little bit. I'd mentioned Valero. But here we see that today, that same criteria, a week later, we've got positions on Corning, Moody's, General Electric, Discover, Lennar Corp, and Ascena Retail Corp. Well, let's just take one of these RPMs. Let's say that after we did our research and analysis, which was talked about in part 3 of our discussion, let's say that let's take the middle one. Let's say we decided on this Discover DFS RPM, where the stock's at $21.98, and we could purchase the January 2012 25 strike put, which would give us a maximum risk of 5.9% or 158 on the position. Okay, let me just highlight that very quickly. Well, let's say for purposes we're going to paper trade some RPMs. Okay, so what I can do now, we already created a paper trading portfolio. So what I can do is after I've done all the research, we talked about going to the stock charts last week, the company information and so forth. Well, my last step would be add to portfolio. Okay, so let's click on add to portfolio, and this will take us to a menu where we can pick and choose which portfolio we want to enter. Now, if you're just creating a paper trade, I know I'm skipping back a little bit, but if you're just creating a paper trading portfolio for your RPMs, I think the easiest way to do it is in this fashion. Go to the search tool, plug in your criteria, and pick maybe the top 4 or 5 results that you want to see perform over time. If it's your first time selecting Add to Portfolio, you would only have this choice available when you select Add to Portfolio. You would see this choice, for new portfolio number 1, and then cash on hand, $100,000. So right from this menu, we could create that. I could create another paper trading portfolio, and we could call it RPM Paper Trades. Okay, and it would start me off with a cash on hand of $100,000. All the return calculations would be the same, but and the percentages and so forth. But I could choose to use this and just have a few paper trade portfolios with $100,000. However, if I wanted to put it into the paper trade portfolio that we had created, I would just click the radio button there for paper trade portfolio, or I could put it into the actual portfolio or one of my other positions. So for this, let's just put it in that paper trade portfolio, and I'll click Insert. When you link from the More Information menu to Add to Portfolio, or even from the Profit and Loss chart, it'll copy over the information for you. Before, when I entered it manually, I had to enter in my stock symbol and which price I paid for it, and then I had to select the option. But since I linked from the search tool, the system already knows what stock I was viewing, what is today's date, what was the price of the stock, which put I selected, strike price and expiration, and the price there as well. So now I just have to fill in the basics when I link to it from the search by symbol or the portfolio. And we'll just do 100 shares of DFS and 1 put contract. And if it's a paper trade, I can use a commission fee that I pay at my broker, or I can just put in values of 0 again, treat it as a true paper trade, and then we'll click Submit. And now, where are we? We're in our paper trade portfolio. We have 1 married put, Discover Financial Services. Remember, we started this portfolio out with a starting basis of $50,000. Took us about $2,700 to enter this RPM. And so we have, of course, the gain or loss on the position. Now, we do have a loss right now on the put option. Why is that? Well, on the search tool, it grabbed the natural ask price of $4.60 for us. But if we liquidated the position, we'd be more than likely to get the natural bid, which is currently $4.20. So we'd have that loss of 40 cents or $40 on the put option. And now that I've selected View Position Analysis in one portfolio, it has it selected for me in all portfolios. So I can scroll over. Wouldn't make sense to liquidate the position right now, but I'd have a loss of 1.5% due mainly to the bid-ask spread. Okay, Ivan's got a more complex question. Ivan, I'm going to save that to later. I'm going to write your question down or leave it here in the queue, and then I'm going to come back to it because it's a little bit more complex and it's a little bit ahead of where we are right now, but I am going to address that. And short answer to your question, Ivan, I would track that as two different positions. Some of you who are more familiar with the blueprint right now are saying, Mike, can you show how to enter portfolio existing position for RPM plus income method number 1 plus income method number 8, stock plus 5 legs? I would treat that as two different positions. I typically do that. I treat it as a radioactive profit machine, my Mary put position with income method number 1, so it'll be listed as a collar, and I track IM8B as either a custom spread or as a direct iron condor. That's how I would track that. And I'm going to talk about that when I discuss income method number 6 and a little bit about income method number 5. Hopefully we have the time. Okay. So we talked about entering a position manually from the search or the search by symbol. Use the more information buttons to add to portfolio. Once you're in the portfolio, you want the view position analysis menu. I'm actually going to go back. I'm going to select a new portfolio now, and I'm going to select the PO for Radioactive Part 4. Okay? This is a portfolio that was created essentially last week. I did this after last week's presentation. And I want to just showcase very quickly that all of the transaction dates were from 2/8/2011. These were some of the positions that came up in the search. I apologize for the clearing of the throat there, ladies and gentlemen. All right, now, this CarMax position, we analyzed CarMax at 34.39, and we saw the July 37 strike put at 4.50. Some of the other positions in our search menu, we had a Talisman Energy July 25 put. Stock was at 23.27, and the 25 put was trading at 2.95. There was also a Valero position we talked about briefly, where we were looking at Valero at $28, and we could buy the September 30 put for $3.95. Now we can see that we have our stocks have gained. Let me talk about that for a moment. And before I talk about some of the other functionalities, the alerts, for example, or the functionalities of the portfolio, I want to be direct, and I just want to say that the first thing I do when I open my portfolio in the morning for my RPMs, for my radioactive profit machines that I'm tracking in my portfolio, the first thing I do is when I open the profit and loss portfolio is my eyes go directly to this column, and I look at the first listing for each trade. I look at the gain-loss column, the percentage gain-loss for each trade. Why? Well, as many of you know who own the blueprint, most everyone here owns the blueprint or is reading the blueprint, it's suggested in the blueprint, some of the rules and the guidelines, they're not strict rules, but the guidelines there say you want to look to maybe trade an RPM when the stock's trading near the put strike price, or if it's moved up maybe 5% to 8%. So or if the stock's dropped 5% or maybe dropped 4%, it might consider doing an income method number 9 or maybe even an income method number 6, which can be used in the bearish strategies. Now I'm looking here and I have a gain on CarMax of 6.4%. Remember, we bought the 37 strike put and the stock's now trading at $36.60. Okay, so my stock's moved up 6.4%. This might be a good idea for me to look at a potential income method. Talisman Energy really hasn't moved. The stock's moved up 21 cents, and it looks like I've dropped more on the put option due to the decline, slight decline of maybe 10 or 15 cents, but I also know that there was a 20-cent bid-ask difference when we first opened the position. And Valero Energy is close to our range. We have the 30 strike put. The stock's at 29.18. It hasn't moved up that 5%, but maybe we can, some of you, and a lot of questions I get during the webinars are, hey, if nothing shows up when I'm looking for income methods, is there a way that I can see what this position would look like if I did sell a call right now, even though it's not up at the 5%? And I'm going to use the Valero position to demonstrate that. Now, real quick, I want to treat, well, I don't want to treat everyone, but I want to show something real quick. You're seeing here a couple positions, one that's moved up 6.4%, so it's a great bullish example where you might be able to evaluate some income methods. One's close to it, so it matches what I want to show with using the profit and loss chart to evaluate manual income methods. And this other Talisman one is kind of stable right now, so hey, this might be a chance to manually try to put together something like Ivan suggested, one of those income method number 8s that are sometimes used when the stock's stagnating, or maybe even an income method number 6. So did I cherry pick these trades? No. I like you guys too much. I'm going to be honest with you. No, I did not, actually. let's go back very quickly. We're going to go back into the married put menu, and I'm going to click on Backtest. Okay? And the reason why I'm doing this is I'm going to, in the Backtest menu, I want to go to Smart History Excel. This is where we can run historical screens. All right, so I've got a married put, and let's select our date. Our historical date was February 8th. This is when we hosted Part 3, the Research and Analysis menu, or the Research and Analysis portion of our webinar series. And I'm going to run the search we saved that night, selected search for Part 3. Let's click Submit these settings. So here were the top positions, the top 15 of the 25 positions that matched that criteria last week during our presentation. And the closing prices, and here's the Talisman Energy position. Stock at $23.25, bought the July 25 put for $2.95. We had the CarMax position. We did have the 38 put, but last week when we went to the what if reports, we focused on the 37 strike put that was less in the money, had about a 5% risk. And here's the Valero Energy position. Now on this one, there was the 31 strike put, but when we were looking at the full screen, we had the 30 strike put, which only had about a 6% at risk. So these were the actual trades that were listed on the search screen last week. I did not cherry pick. I actually put those into the portfolio after the webinar ended. Okay, because I wanted to see how they would have performed. I was hoping one would be down, one would be up, and one would be stagnating, and we're almost close to that. All right, let's go back to the portfolio. We can just click on the My Portfolio tab, and let's go into Profit and Loss Portfolios. Okay, now, before we get into the income methods very quickly, something that's important is we have this field for alerts. When we talked about the tools, hold on one second, I apologize. When we talked about the main tools in the portfolio menu, we talked about the alert summary where I can view all the alerts I've set on each portfolio. Now the third column in the portfolio is the alerts menu. This is our alerts column where we can set different alerts for each position. What are some of the alerts I might set? And we'll just use this quickly on the CarMax example. Well, following the rules in the blueprint of what we normally look for, what have I already discussed? Well, we might want to look to see an alert if the stock has moved up 5%. We also might want to be alerted if the stock has dropped 5% or 4% or so. We might want to set an alert if we're within 30 or 40 days, actually probably within 60 days of the expiration date of our put option. To set alerts on an RPM or any position you're tracking in the portfolio, simply click the View Text link in the Alerts column, and this will link you to the Alerts page. Now, for the married put, I just mentioned a couple. We start off, we can set an alert for the stock price limit, the actual monetary limit of the share price, but I want to use a stock percent change. So I want to be notified if my stock declines by 5% or if my stock moves up by 5%. Okay. I can also put this in leg 2 if I wanted to, but it's already there in leg 1, so I don't need to. If you wanted to be notified if your option bid, the bid price of your put option dropped to $1 or below $1, well, I can just put that in as well. And we'll just type that in. Or if there's a percentage change, you want to be notified if my put option has dropped by more than 30 or 40%, I could put that in as well. We talked about the days to expiration. So if I'm within less than 60 days to expiration, I'll want to see that as well. Now, to get more advanced, of course, we talked last week about some of the, when using big charts, the simple moving averages or the Bollinger Bands. If you wanted to be notified if your stock moved above or below a simple moving average, moved above or below an upper or lower Bollinger Band, or if you moved above or below a 52-week high or 52-week low, you can set that. Something new that's been added in the past 2 months, if you wanted to know you're tracking an RPM in your position, I found this very common even in my own portfolio. Customers have this issue, and I have it as well. I'll be talking with a customer, and they'll say, well, my RPM hasn't moved in about 15 to 20 days, maybe even 30 days. I was wondering if I should just liquidate it right now. And when I'm talking to the customer, I'll look at the research tool for that position. I'll say, you have earnings coming up in 2 days. Why not leave the position as is? Because you know you've got a limited risk of only 4 or 5% and see if you get a pop. Oh, I'm tracking 20 positions here. I didn't even think that earnings would be coming up on the stock. Well, now you can set an earnings date. So we can set the days until earnings. I want to be notified if I'm within 5 days of the earnings report. And you could do that on the ex-dividend as well. That might, for some of you trading covered calls, you might want to be notified of that. Once you've set the various alerts that you want, just click the Save button down at the bottom. And this will take us back to the portfolio, of course. And now you see we've triggered an alert. Now, I did enter a monetary alert for my put option. So that appeared in the upper and lower stock limit, so my $1 here, but that's not the alerts that triggered. I know because I just entered it that I wanted to be notified if the stock had moved up 5%, and that's what's happened. But when I see the alert column highlighted, in this case, when I open my portfolio, I see one of the alerts triggered. I'll just click on View, and it'll tell me which one is triggered. Okay, change increase for leg 1. My setting was at 5%. 6.4% gain is greater than 5%, so that's why the alert has been triggered. Okay, so you can just set a variety of different alerts there based on how you want to track the RPMs. Mark wanted to know, have you added email for these alerts, or how long until you do? Mark, we've got the programmers doing a lot of different projects right now. I cannot give you an ETA on when that email functionality is going to be in there. Best guess, 3 months, maybe 2 months. You really don't know. It is something that we have planned. But remember, I mean, most of you probably have a variety of alerts with your broker already, and that simple alert that I just put in there about the stock moving up 5% or the option price declining down to $1, you can probably set that at your broker, and they probably have some features there where they'll send you a text message or send you an email, and you can just use that as your basis. All right, now, okay, so we've got our positions entered from last week. We've got a position that has moved up over 5% from when we purchased it. We've got Valero, which is close as well. I want to scroll over real quick, and I can say we're going to look at our position costs again. We're going to evaluate our position analysis here, the numeric part of the position analysis. My position cost was $3,889. My liquidation value, if I sold to close the stock right now and sold to close the put, is $39.80 or 2.3%. Why am I looking at that? Well, the reason why, remember what I said before, when I go into any RPM, I know in my mind what my personal goals are for each position. I might want to add my expectation of where the stock's going to go after I do my research and analysis, my monthly goal for each RPM. I've got that set in my mind. Now, the position we found last week on CarMax, in just about 8 days from when we opened it on 2/8, has a return of 2.3%. If that matched my goals, I could consider liquidating it right now, taking the profit, and then just moving into another position. But if I'm still expecting CarMax to grow, I want to look for an attempt to maybe bulletproof the position right now. How are we going to evaluate the income methods? I want to pause real quick. I just want to mention, what have we done so far? We talked about creating the portfolio as a test and paper trade. Number 2 we wanted to discuss was entering positions in the portfolio from the search tool, and from the other search tools we did that. Part 3 was evaluating the position analysis and liquidation gain or loss on an RPM, and that's when we check that, and we can view that over on the right. We also talked about setting alerts in the portfolio for the individual RPMs. So now, how do I want to evaluate the various income methods from the blueprint? Well, to do that, so on the far left next to each position, we have the Edit More Info column, just as we did in the search tool and reviewed that when we went through the research and analysis. And what I can do from the More Information menu, when I click the blue button, we can of course do some of the other menus. We can look at the profit and loss chart for our RPM. We can take a look at the charts and do our further research that we had from last week from the search menu. But I want to open the Position Actions menu. Let me scroll down a little bit more here. There we go. I want to look at the Position Actions menu. This is where you make changes to your position. If you wanted to close the position, liquidate it. If you wanted to close a leg, if I wanted to just sell to close the put now, for example, or sell to close the stock. If I accidentally entered a wrong value into the position, I forgot a decimal point in the commission, or I put in too many shares, use the Edit Position menu here from Position Actions to make that change. In the paper trading portfolio, after you've tracked the position for all, you might just want to delete the position. What this will do is delete any record of the position, and it'll add the cash on hand back, so you'll be starting back from square one on that paper trade portfolio. You could also delete a leg. If you wanted to just add an option leg, if right now you said to yourself, well, I know right now on CarMax I'm going to force an income method and I'm going to sell the 37 strike call right away. Well, you could add an option leg and just put that in there. The position notes field, this allows you to enter notes on your position. And of course, if my RPM pays a dividend, when the dividend comes in, I can just click Add to Dividend. And that, when I add a dividend, that will also adjust the effective cost per share column. But what we want to do now is link to the menu for position analysis. So we've got our RPM entered into the portfolio. Sorry for the clicking and dragging. We had the position from last week. Our stocks moved up 5%. Now we want to evaluate what's next. When you first link to the position analysis screen, it of course gives you a breakdown of your original position. We had 100 shares of CarMax, 34.39. Got our July 37 put at 450. Now we're shown the profit and loss chart for our position on the right, and of course we have the current stock price at 36.60. The static break-even, the break-even at July expiration is 38.89, our stock price plus our put price. Assuming we do no adjustments, we hold the position all the way to July expiration, and the stocks, we need the stock to be trading at 38.89 to break even. My apologies. The current bid is $3.20, and we saw that on the other screen. Our put option has dropped to $1.30. We still have 150 days remaining to expiration, and our original risk on the position was $1.89 per share, or roughly 4.9%. Okay. Now we have the text links here where you could go into some of that further research and analysis that we talked about last week. And here's my profit and loss chart. The blue line, of course, shows me the profit and loss chart at expiration, and the curved red line shows us where we are right now. Now when I scroll down below that menu, we have a little bit more detail that we can view of the 6 columns that we added into our portfolio. So we have our original position value, total cost of stock plus put. And if I could click the details link, it would just show me the math for the 100 shares in the one put contract. Our current liquidation value, well, our liquidation profit and loss would be $91, and there's that 2.3% after 8 days. And then we could click on more details if we wanted to analyze the math. Now our future expiration value, again, this is assuming that the stock's trading at the same price it is right now. It stays at $37 per share. Our liquidation gain or loss, we'd have the full loss on the position. This is assuming that we hold it all the way to expiration, stock's trading at the same price, and we make no further adjustments. That's not our plan, is it? No, the stock moved up as we expected. We want to look for some potential adjustments. Let me scroll down below the listed trades, and now we have listed a variety of rollout opportunities that are based on the discussion of the income methods in the blueprint. Well, starting off with the most popular one, we have a brief description. Our stock has risen by 6.4%. We may want to consider writing a call to create a collar, which is income method number 1. And it gives us the basic view of the positions. Now we have 2 choices for this particular CarMax position. We can roll out to April, or we could sell a call out to April, which has 59 days to expiration, or we could focus on the March calls that have 31 days remaining to expiration. This is not telling you which income method is best. There is no best income method because we don't know the future, which is why we're using the put options and trading radioactively. What this is showing you is the math for each one of the income methods. And again, based on your SIGA model, that's going to help dictate not only which income method you would want to use, but also which potential strike. For me personally, if I'm looking at this position and I was considering selling income method number 1, even though the premiums are higher for April, of course, I could sell the April 37 call for $1.70. I've got the 38 call at $1.25 and the 39 call at 90 cents. Well, just comparing the 37 strikes, the March 37 call is only trading at 90 cents, so it's 80 cents less. Well, for me personally, if I'm doing any, and the things that you would normally do in any strategy, if you think just about of a standard call or position or selling a call against a position, normally when you're selling a call as a covered call or as any part of a collar, you usually within the near month, 30 to 45 days out in time. You can go 60 days out in time, but normally you want to increase your annualized return by selling the near term. And we see here we have that column. So assuming the maximum return on these income method number ones, the March 37 would give me about a 54.9% annualized return, max return, and the 37 call would give me a 37.1. If I sold the April 37 call, it would only be 37.1%. But again, this is personal preference. If you wanted the higher premium now and realize that you might have to wait 60 days roughly to realize that $1.70 premium against your RPM, it would lower your maximum risk to 0.5%. That's really the important column you're focusing on, is the new maximum risk and the new percentage maximum risk for the position. But you won't really realize that till 60 days from now. Okay? And with the March 37 call, we still almost cut our risk in half, cut it down about 2.6% or less than $1 for the total position, down to 99 cents. But we only have to hold it for 31 days. It's a shorter time frame. We might be able to adjust it. And if it turns out that the stock continues to move up, and we want to apply income method number 2 to roll the 37 call, we know that we already have the April series available, so we could look to do it at that time. Of course, the prices would be different after time goes on, but we know it's there. Okay? Now, analyzing between the income methods is really going to come down to your SIGA model. For the income method number 1, my SIGA model is, well, the stock's moved up. I want to look to generate income now, maybe just 30 or 45 days out in time to lower my maximum risk, but I'm not expecting the stock to continue to move up that much in the next 30 days. That's really what income method number 1 comes down to. And I'm not going to evaluate each income method, but you're really not expecting the stock to continue to move up. And let me show you why. Once you've evaluated the different income methods, what you're going to want to do individually, and we'll just focus on this March 37 call, is I'll click the More Information button here next to this Rollout Opportunity, and I want to click on Simulate Trade. Now this will take me to the Simulate field, where it's giving me a side-by-side comparison of my positions. Over on the left, in red, this is our original position, just our married put. Bought the stock at $34.39, bought the July 37 put for $4.50. My original maximum risk, remember, was 4.9%. My max profit is infinite, and right now we have a current return of 2.3%. Now the right-hand side is showing us the math if we applied that income method number 1. If we took our existing married put and sold the March 37 call for 90 cents, well, we take our cost basis for the total position down to $37.99. Our maximum risk is lowered to $102. This, by the way, is including commission costs there. And so my new maximum risk would drop down to 2.7%, and the maximum percentage return now on the position, remember, it has to be fair comparison, so assuming no other adjustments with income method number 1 would be 4.7%. So if I sell this call, max potential return, am I doubling what I could have right now? Yes, I am. I'm actually almost directly doubling it from 2.3% if I liquidated it right now to 4.7% at March expiration. Again, does that match my SIGA model? You would have already had that written out when you entered the RPM. What are your personal goals for the position, and what are you looking to achieve? Now down below that, we have a comparison profit and loss chart. Hey, numbers can get tedious, I know. So we're showing you the profit and loss chart of your position. Now let me clear this up a little bit. I'm going to remove the blue line, and I'm going to remove the black line. Now for now, let's just ignore the vertical lines on the position here. That's just showing us the break-evens, and the current stock price is our green vertical line. Red hockey stick chart on the comparison field here is your married put profit and loss chart at expiration. Okay, the same thing we would have saw when we ran our what-if scenarios when we were first analyzing the position. So this is what we'd expect to see on our position as the stock continues on in time. okay, to July expiration. And it shows you here the values current over here on the left, current in July 2011. So of course here we are right now. The current stock price is in green. We're still below our expiration profit loss and our expiration break even. But as we continue to move up, you know, we can kind of see where our profits would be. For example, if the stock was trading at $42 on July expiration and so forth. Now when we first opened this menu, we did see a curved black line. Let me add that back in. So down on the bottom, I just click the circle in the legend, and that adds the curved black line. What this is showing me is what would my current RPM be, my existing RPM be on 3/19 on March expiration. Why is it showing me the value on March expiration? Well, because that's the expiration date of the call we're planning on selling. This is where the CU model comes in. Let me remove the red line, and let's just focus on that black line. Here we are. Current price is at $36.60, so it's right at our put strike price. We do have a gain right now of almost about 2.3%. We saw that when we were analyzing. It's about $89 or so, so we got the 2.3% profit on the position. Now, if my expectation over the next 30 days is that CarMax might continue to move up and might be trading at $38 or $39 per share, I might not want to sell this call right now. I might not want to enter this income method number one. Why? Well, let's add that blue line back in now. Okay? When we sell a call, even on the RPM, when we sell a call against the RPM, income method number one, we're capping the gain on the position. Okay? So yes, if the stock's trading right at 37, we generated some premium, we lowered the risk on the position, but now if the stock continues to move up, we're not getting any further advantage of that unlimited upside profit potential. What happens, of course, let's just assume now March expiration, if the stock's trading at 39, well, on the state RPM, just the RPM by itself, we're still gaining positive delta because our stock's moving up at a delta of 1 and our put delta is declining. Okay, so we're still gaining positive delta. When we sell this call, if the stock's trading at 39 on March expiration, the call delta goes to 1. So that remaining $2 of stock increase, we don't get any positive gain on. That's countered by the short call. So SIGA model for income method number one. We got into CarMax last week. The stock moved up as we expected. Had a little help from earnings, I think, in there as well, and earnings from some of the other stocks also. But it moved up 5% in the first 8 days. Now we're evaluating the income method. What's my SIGA model? Current conditions, my stock has moved up 6.4%, and I'm looking to apply an income method. Second part is the important part. This is when we would have gone back to the stock chart and say, now that we're up 6.4%, what are my expectations going forward? Am I confident? Do I feel that CarMax is going to continue to move up maybe another 5 or 6% in the next 15 or 20 days? Or do I think the stock's kind of reached a high right now and might just sort of stagnate at around $36, $37 per share or pull back slightly? If my expectation is the previous one, if I'm expecting the stock to continue to move up and I might see another 5 to 10% gain in the next 15 to 20 days, I'm not going to do income method number one. That doesn't match my SIGA model. This profit and loss chart, this capping the gain here on the blue profit and loss chart does not match my SIGA model. It's irrelevant if I'm to me, and everyone has their own personal opinion, but to me it doesn't matter if I'm generating that income by selling the call. I'm generating that 90 cents because I don't want to get stuck in a trap where if the stock really takes off or whatever news comes out, it's a strong stock or an institution comes in and it spikes up to 42, I don't want to be short that 37 call in that scenario. It doesn't match my SIGA model. I'm not going to trade it. Now, if my expectations were the latter, if my expectations were that CarMax is now hit a high point, I don't think it's going to go much higher than 37 and it might pull back from this price, or it might stay right around, you know, even between, let's say here, between $32.50 and maybe even about $41 per share. I just think it's going to hover in that area. This might be a good time to do this income method number one. That might be a good income method. It has to match your SIGA model. Now the goals. Let's talk about the goals for a minute. Remember I said that when I'm doing income method number one, I wasn't looking at the April calls because they were 60 days out in time. I wanted to focus on the March calls that were within that 45-day time period. talked a little bit briefly that my personal goals for an RPM might be to generate 2 to 2.5% per month on the position. Well, I could liquidate right now for 2.3%, and I'm assuming the maximum return, if the stock's trading right at 37, would be 4.7% in 39 days. Does that match my goals? Hey, yes it does, doesn't it? You know, if I'm expecting just a minimum 2% return as I'm rolling the RPMs or generating that kind of premium, if best case scenario the stock's right at 37, well, the return on the RPM theoretically be 4.7%. That would match my goals. And of course the A for the actions, well, what am I going to do? I'm going to sell a call against my RPM because I'm expecting the current conditions are it's moved up. My expectations, the stock is going to be trading right around $37 per share in the next 30 days, and it does match my goal of generating that roughly 2.5% income on a 30 to 45-day period. This is what you're going to use the Simulate Trade feature for. Compare what your original RPM would look like to what the profit and loss chart would look like after you applied the income method. Does this match your SIGA model? Don't just sell a call. Don't just do income method number one because the stock's moved up and you see a good premium. Take a look. Does this match what you're looking for? Does this match the current conditions, your expectations going forward, your personal goals, and your actions? That's what you want to evaluate. Let's say, for sake of argument, and I know we're past the 10 o'clock hour, I'm going to try to, these presentations, I should have said this in the email, our past few presentations have gone over. We are recording this. It will be archived, of course, but we'll probably get close to about the 10:30 hour or 10:30 time tonight before we're finished, okay? But let's say here's my income method, but I saw it. My expectations did match my goals. I know the actions, but my expectations for the stock are it's going to continue to move up. I don't want to cap my gain with income method number one. What would I do now? Okay, let's close down our Simulate Trade feature, and let's go back to the position analysis view. So I'm going to skip now. I'm going to be fairly graphic here. I'm going to say, okay, income method number one does not match my expectations. So I'm not even going to look at any of the other strikes. It shows the first one, but my expectations are I'm expecting more of a gain in the stock in the next 15 to 20 days. So I'll not look at the income method number one menu anymore, and I'll evaluate the other income methods. I have opportunity here for income method number 3, income method number 4, and income method number 6. Now immediately my eyes might be drawn to some of these opportunities for income method number 3. When you see a negative at risk, a monetary at risk, and a negative percentage at risk, that means the position would be bulletproofed. So I know your eyes are going to be drawn to that right away. Well, the trick with income method number 3 is I'm swapping time. I'd sell to close the July 37 put to buy a closer input, maybe at a different strike. If I sold to close the July 37 and bought to open the March 38 put, my new break even would be 37.74. That would be my new cost into the position, total cost basis, but I'm buying the March 38 put. So I'd be guaranteed a return of 26 cents or 0.7%. Well, does that make sense? Let's evaluate. One more time. Click on the Simulate Trade button. We can see our side-by-side comparison. Again, if I liquidated right now, we'd have a 2.3% return. The maximum risk is 4.9%. If I sell to close my July put, buy to open my March 38 put closer in time, I now have a maximum risk of negative $26 or negative 0.7%. It's bulletproof, and I have an infinite upside. Isn't that where I want to be? Well, maybe, maybe not. What's the trade-off? Well, here's my RPM as it exists right now on March expiration. It's a little different view and wants to compare it side by side in this case, okay? So here's my RPM as it stands right now, and then here's the RPM. You can barely see the blue line down here at the bottom. Let me accentuate that here by just using the pen tool here. Just going to draw this a little bit, because this would continue on down here for our profit and loss line there. All right? Now, hey, this looks good. I'm bulletproof, and if the stock continues to move up in price, I'll still get decent monetary gain on the position. But what's the problem? Well, now it's only 31 days. I swapped 150 days plus of time to continue the trade if my expectation are it's going to move up for only 31 days of insurance. Again, you'd have to address your SIGA model. if I want to generate income on this position and I'm expecting it to go up over the next 30 days, for example, and I'm expecting it to move up farther than that, I think this is a good growth stock for the next 3 or 4 months, probably don't want to shorten my time. I probably don't want to do income method number 3. You may look at that and say, well, that's okay. I can roll it now and bulletproof the position, and as I get closer to March expiration, if I think it's going to continue on, I'll just buy another July or an August put when I'm closer to March expiration and still have protection in place. You're absolutely right, you will, but you'll end up taking the position out of bulletproof status because you're going to have to pay more money for that put option that you're going to try to still have protection for the next 4 or 5 months. If I'm expecting it to continue to grow over the next 4 or 5 months, I really want to just leave the put as it is rather than do income method number 3. But what's discussed in the blueprint, of course, is, hey, if I do this income method number 3 right now then and roll to the 38 put, I might be able to sell that March 38 call now and that would take you to a conversion position, a straight line profit and loss chart. And you'd want to evaluate that, again, based on your SIGA model. Okay? And then, of course, we'd run through the, we'd run through the same process with income method number 4 and the income method number 6. All right? So that's what you're doing with these positions. Now, this is where the simulate trade feature comes in. What are your goals? What are your expectations? What are you looking to accomplish going forward? Let's close this menu down for right now, this position analysis screen on the CarMax position. Let's go back to our portfolio. I apologize there. I went to the wrong window. Sorry about that. Now, we talked earlier about the Valero position. It's moved up 4.2%. It's close to the put strike price. We have the 30 put, the stock's at $29.18. It's moved up $1.18 since we purchased the position, and the puts declined about 50 cents. Remember what I said at the beginning. I focus on that gain or loss column first because I'm looking to see if any of my RPMs have moved up in price from the position. Okay? Well, if I wanted to evaluate if there are any rollout opportunities on Valero, it's moved up 4.2%. Go to Position Actions, click on Position Analysis. Okay? And here we are again. There's the breakdown of our Valero position, our total at risk, days remaining to expiration, the current stock price, and our break even at expiration. Scroll down further on the position, and here's our breakdown, our liquidation value. We'd have a 2.1% gain after 8 days. And if we held it to expiration, made no adjustments, we have a loss of 6.1%. Then as I scroll down further, I see the history, and if I added any dividend information, that would be recorded for us as well. But, oh, Mary, I'm sorry, I just saw your question. Or Marilyn, I'm sorry, I just saw your question. Can you please say how you close the analysis screen down? Is it just clicking the X? Yes, I'm sorry. The position analysis screen opens in a separate window, so I can just click the red X on the browser, close the browser down, and the portfolio is still open behind it. Okay, and same with the simulate trade menu. When I'm in that simulate trade feature, I just close the X, and we still had our other rollout opportunities on this analysis screen listed behind it. All right, so no rollout opportunities. Okay, and this is because, again, what we talked about, what's discussed in the blueprint, what's programmed into PowerOptions when the income methods are shown and calculated are based on the rules in the blueprint. Okay, so the stock hasn't moved up that 5% yet, that recommended 5% on the position. It's not quite at the put strike price. So, well, what do? Well, if I wanted to evaluate an income method number 1, perhaps, I'd use a different technique. Let me close down this window. And the portfolio tool will be right behind it. Okay, so we have my Valero position again. Let's click that More Information button, and as we did last week when we ran our what-if scenarios, we want to see the profit and loss chart. I'm going to open up the profit and loss chart for our RPM. And this takes us, of course, into the custom spread tool. So here's our existing position, maximum risk of $195 or 6.1%. And what we want to see now is what would happen if I applied an income method number 1. Stock's at $29.18. We own the 30 strike put. Following the rules and the guidelines in the blueprint, you never want to sell a call below the put strike price. So let's scroll back up to the top. And we are in the custom spread menu, the profit and loss chart. I have 2 legs entered, my stock leg and my put leg. But I have 2 other entries I can look at here. So what I want to do is simulate what would my profit and loss look like if I tried to force an income method number 1 right now. If, let's say, I tried to sell the March 30 strike call on my Valero position. Well, I'd click the View Options text link here up at the top next to the underlying stock. And this will pull up a collapsible chain. I'm not going to focus on February because only 3 days left to expiration. So I'll click on March 19. This pulls up all the available strikes. And we see that the March 30 strike call is selling for 93 cents bid, 95 cent ask. So to add this into one of my blocks, I'll simply click on the text link as we did before when we were manually entering the position. It shows me that it's been added. So now I want to scroll down, and there we go. I've got my Valero March 30 call. I need to change the action. For income method number 1, we'd be selling this call against the position. Of course, we're just evaluating with 100 shares, 1 put contract and 1 call contract. And you can put in a price if you wanted to assume what would happen if you received the 95 cents or if you ever get filled at the ask price. But since you selected sell, if you just leave it blank and click submit, it will grab the natural bid price for us that was shown on the chain of 93 cents. So let me go ahead and click submit. And this shows me the new position. So my maximum risk now is lowered down to, there we go, 3.4%. We generated some income, so the maximum loss is 3.4%. The max percentage return at March expiration, if the stock's trading right at the 30 strike of our call, the call that we sold, then we'd make 5.9% on the position. And again, what am I looking at here? Well, the green line, the green vertical line showing me the current stock price at $29.18. If my expectation is that Valero might be trading up at $31 or $32 per share, maybe $33 per share, for example, do I really want to enter this income method at this time? Do I want to cap my gain and have to go through trying to roll it and then automatically sell a new call just to generate some income right now? Maybe, maybe not. That's going to depend on your SIGA model for the position again. If I'm expecting the stock to continue to move up, I might not want to force this adjustment right now. Or if I think Valero is going to continue up, I might wait till the stock reaches near 30, gets closer to my put strike price, and then evaluate selling the March 30 call or maybe even the 31 strike call as well. That's something that you'd want to decide. But you can simulate the income methods here using this profit and loss chart. Now, for example, many of you are familiar with income method number 6, applying a bear call credit spread on the position. So if I wanted to evaluate that, well, I've got an extra leg available. I'll just click on View Options again. With income method number 6, we'd sell the March 30 call, and let's just say we buy the March 32 call, for example. Oh, Rick, you've got to go. I'm sorry these go a little bit long, but I'm glad you enjoyed the presentation. And it is recording. I hope to have it up in the archives there in the Learning Center late tomorrow afternoon or at the latest Friday evening. Okay? All right. So what was I going to do? March. We're just going to simulate the 32 call, buying it for 38 cents. Actually, the bid price at 41 cents, so we'll simulate that. Okay. So again, I just click it. It shows me that's been added. I'm going to buy 1 contract. I'll leave the natural bid price at 41 cents. Let's hit submit. How would that change my outlook? Well, the great thing about income method number 6 is it doesn't limit the upside. We now still have a long call in the context of the married put position, so if it really takes off, if Valero pops up to $36, $38, $40 per share, even though we sold a call, we haven't capped our upside. Now we've got this little dip here. We generate the premium here. Our maximum risk is lowered to 4.7%. We didn't lower the risk as much as we would have with income method number 1 because we took some of the premium from that income method number 1 and bought the extra call. But this would run a simulation of what if I tried to force the income method number 6 right now. And again, you just want to evaluate what is my expectation of Valero over the next 30, 35, 45 days. On this menu, you can also simulate rolling the put. Let me do that very quickly. Okay, I'm going to clear out my income method number 6 little listing there. Oh, Ivan wants to know how many of the RPMs are built into PowerOpt. Is it 1 through 10? Yes and no. I don't believe 8 is actually programmed in there right now because it's so infrequently used by Kurt and by everyone that we've talked to who's been trading the radioactive techniques. We haven't really programmed income method number 8 into the portfolio. income method number 7 and income method number 2 are shown. But remember, income method number 7 and income method number 2 aren't really independent income methods. They're more of an adjustment to income method number 1. So basically all 10 income methods are there, but you can use the tools to evaluate all 10 income methods. Okay, so what was I going to simulate here? I was going to simulate my stocks moved up only 4.2%. I've got my stock and my put position. What if I wanted to evaluate income method number 4, where I'd sell to close my 30 put and let's say buy the September 32 put. I'm going to move the put up in strike, sort of take advantage of the ATM bell curve. We'll run that same simulation. I'm going to click on View Options. I have to go to September now, so I'll click on the link for the September series. It shows me that the 30 strike put has already been added, but I'm going to add it back in again. Okay, so I clicked it again. It doesn't say added twice, but it's shown now in my third block. So what I'm going to simulate is selling my 30 strike put, and I'm going to take the natural bid price at $345. So I'm not going to put in a price. I'm going to assume that I sold to close it at the natural bid price of $345, and then we're going to add in the 32 strike put. Okay, so I add that in there. I change my action to sell, and then I'm going to go ahead and buy the 32 put one contract. Okay, and I'm going to leave the natural bid price there at $475. So when I click Submit, let's just scroll down. What have I done? Well, I've changed my at-risk amount from what it originally was. I have a lower at-risk amount now, but still an infinite upside. Okay? What's the trick with income method number 4? It talks a little about income method number 3. We talked about income method number 1. Remember, our original risk was about 5.9%, I think, for this position. So we were able to lower it by about 2% by rolling to the 32 strike put. What is some of the problems that can happen with doing this income method, especially when it's not time to do the income method? Well, see, when I was looking to do income method number 1 or income method number 6, the best time to do that is when the stock's trading right at the put strike price. We haven't reached that point yet. We're using the custom spread tool here to force and evaluate income methods, which I don't recommend doing. I'm just showing you how you can do it if you wanted to see how this income method number 1 would react with your RPM, or how income method number 4 or 3 would react. Well, if you use income method number 4 too soon, yes, you lower your risk. We dropped it down to 3.8%, but I won't really be able to do a really good income method now until the stock moves up to 32. So even though I lowered my risk, if my expectation going forward is in the next 30 to 60 days from now, I don't think that Valero is going to be up at 32. I probably wouldn't want to do this right now, because if the stock pulls back from here, it's not going to make any sense for me to sell the 32 call, and I wouldn't want to sell a call below the put strike price at this point, because that would just change the profit and loss chart and wouldn't match my SIGA model. Okay, Joe asked a question that's I'm going to answer that in a few minutes, Joe. Okay, I want to go through some of the other portfolio features here. Your question's not really related to the radioactive trading methodology, and that's okay. I'll just show you that in 1 second. It's more of a basic functionality question. All right, so that's how you could evaluate the income methods using the custom spread builder, the profit and loss chart, if you didn't see any available on your screen, in the position analysis screen. Let's close this down, and let's go back to our position portfolio. Now, Ivan asked a question earlier that I probably want to address too. Sorry, Francisco. I'm sorry to see you go. It's a personal joke here. He says, while we are discussing Valero, Francisco has to go. And it's thank you, Francisco. It's great seeing you here. I'll let you know when, of course, the webinar is archived for you. All right. Some of the more advanced income methods, and I should probably show this from scratch. I don't want to get too deep into it, but I will. All right, let's go back to I lied. Let's go back to the profit and loss chart here. And I'm going to talk about income method number 5. Well, let's keep with that income method number 6. When we talked about income method number 6, we looked at Valero, and we were talking about selling the 30 strike call for about 93 cents, and we were going to buy the 32 strike call for March for 41 cents. Now, if I wanted to add that into the portfolio, I could add the individual legs, because it's not there in the position analysis, so I could add individual legs. So from my position, we'll go to position actions now. I'm going to click on add an option leg. So it'll take me to that entry field. So my action, I'm going to first select to sell. And we're going to look at the March options, and I want to sell the 30 call. So I just click that, it adds it for me. Bid price of 93 cents. This is a paper trade, so commission fee of 0. All right? So let's go ahead and click submit. Now that we've got my entry there. Okay, so now I have a collar. That's effectively what it is. Collar is any combination of long stock, short call, and long put. So we've got one collar listed. But I want to add another leg because I'm going to turn it into that income method number 6 position. So let's go ahead and add an option leg again. And this time we're going to buy the March 32 strike call. All right, so click on the, change the action to buy, click on the menu, 32 call, 41-cent natural ask price. I'm going to leave that alone, and I'm going to click submit. Now, this is some of the questions that, this is some of the approach that Ivan was asking earlier. As soon as I do that now, this is registered as a custom spread. The reason why it's registered as a custom spread, you can enter up to 4 legs of any kind of position into the portfolio and track it as a custom spread. The combination of stock plus put and then a bear call spread on top of it is not one of the standard 23 strategies are supported. It's a married put with a specific income, multi-legged income method on top of it. Now, why is it important? And I'm not trying to pick on you, Ivan, but we've had conversations about this before. Why is it important that I'm calling it a custom spread, and why does this frustrate, I'll be honest, why does it frustrate some of the PowerOptions customers from time to time when they enter an income method number 6 or an income method number 5 onto an existing married put? Well, you see, when it's a custom spread, when it's recorded now as a custom spread, if I scroll over to the right, it's not programmed in to calculate the original profit and loss, the liquidation gain or loss, or the expiration gain or loss. Okay? This is why when I enter into an income method number 5 position or an income method number 6 in my RPM, this is me personally, it might not apply to everyone, but what I'll do, and let me just go ahead and do this first. Position actions now. I'm going to delete my short call that we just created. Oops, I'm sorry. This was an error. Don't want to do this. Let me go back to the previous page. I hit delete position. That was a bad move. So I want to click right here next to the actual leg, the March 30 call, and we're going to delete leg. All right. Do I want to delete the March 30 call that I sold to open for Valero? Yes. Click on delete. Let's remove that. Get it out of there. All right. Now I'm still going to be in a custom spread because we're long stock, long put, and long call. It's not a common strategy. It's not one of the base strategies. So let me remove the long call as well. Let me just delete leg again for the long call. Do I want to delete this? Yes, I do. Okay. Now what am I left with? Hey, I've got my married put back in place. All right. Now what I'm going to do is, okay, back on the custom spread menu, I'm sorry, back on the position analysis, I have my calculations for original expected gain loss, liquidation value, future expiration value, and so forth. Now, one thing I forgot to show, and I apologize because we're getting close to 10:30, is that even though I had the custom spread in there and it didn't have the position analysis shown for me, I could always have linked to the profit and loss chart from that custom spread to see the graph of the income method number 6 applied to the RPM. What I typically do, again, this doesn't appeal to everyone, but this is just how I personally track it. If I had an income method number 6, I keep my married put as it is, and then I go up to the top to enter a new position, and I'd select a bear call credit spread. Okay, I'm going to track them separately in the same portfolio. So what I want to do is for VLO, I've got to put in the stock symbol. And we're going to go March again. And I'm going to buy to open the 32 strike call for 41 cents. Number of contracts was 1, commission fee of 0. And then I'm going to go to my sell to option, click on that view, and we are doing the March 30 call at 93 cents. Okay? So there's my menu. I'll put in 0 as well. And now we'll click submit. Okay? So now I have my Valero RPM, and I have a bear call credit spread. And as I scroll over, I can kind of view the gain or loss. So in my position cost of my RPM on Valero, but the income method number 6, the bear call spread, I generated 52 cents of net credit. So I can kind of look and say, well, I have a gain of 68 cents on the RPM and a loss of 5 points if I liquidated the bear call spread right now, so now I have a gain of 63. And I can evaluate it that fashion. I know it's not the easy, I'll be honest, it's not the easiest thing to do. The programmers are going to work on, they are going to program in ways where you can track the income method number 6 with an RPM and it'll show you side by side the gain or loss for the position. Income method number 5 I'd enter in as one of the custom spreads because it is a ratio spread. And then of course, Ivan, if you're doing income method number 8B, which I believe is a full iron condor, on my position, enter new position selection, I would have just entered it as an iron condor and put in the 4 legs. Okay, so that's how I would have approached it. But hey, I got to be honest with you guys, we've got a lot of discussion on that over the past several months. Wouldn't it be easier if I could track the married put with the income method number 6 together or the income method number 5? I agree with you. It will be done. It's just going to take some time because we've got other projects going on right now. And so just bear with me, Ivan, but that's how I would track it. All right, very quickly, I want to address Joe's question. He asked originally, where's the naked call tab? I noticed not next to the naked put tab. Okay. Remember from the beginning, Joe, I'm not sure if you were with us at the beginning. I apologize. But in the beginning, we discussed that we support over 23 different strategies on Power Options. This basic view I have up here is actually what we customized from last week. We have married put and collar first, and we've covered call, naked put as you mentioned, but naked call is not there. You can customize the menu, the tabs that you've selected, to have any of the 23 strategies you want. Simply click the Other Strategies tab when you log on to your Power Options account. Over on the left are your available strategies, covered call, naked put, calendar spreads, both diagonal and horizontal are in that search menu or in that feature, iron condor. There's naked call for you. Okay, if I wanted to add naked call, I would just remove one of my strategies. For argument's sake, let me click remove next to bull put credit. I highlight naked call from the available strategies, click add to menu, and now I've got naked call. We click save. There we go. We've just customized it now, so now I've got naked put and naked call. You can customize that tab navigation system, Joe, any way you want to. Let's see here. Okay, I got a comment. I can't see who this is because it cuts everything off for me. 1 second, ladies and gentlemen. Ah, Mark. Mark says, you love this job, don't you? I don't know. Does it show? Yes, actually, I do. And Mark, you're probably sick of my voice because you've joined me on the past 4 or 5 webinars we've been doing this series, so you've heard me talk for probably a total of 8 hours since we did one. Let's see here. What is it? Part 4 times an hour and a half. So that's 4 hours. Okay, so you've heard me talk distinctively for about 6 hours straight now on just using the Power Options tools and the different positions. Mark, can you have my job? I don't know. You'd have to talk to Ernie about that. I can't make that decision. All right. Okay, let me go back to the main menu. We're at 10:30. I tried to cover everything I could think of on the portfolio tool. If you guys have questions or something that you think I missed, go ahead and send me those questions. But I'm going to go ahead now and navigate back over to our slide presentation. I just want to briefly talk about, of course, the subscription services. The 20-minute delayed service to Power Options, which covers, everything that we've seen, all the search tool and the functionality and all 23 different strategies is only $59.95 per month, or $600 for the year. The real-time service is $79.90 per month, or $800 for the year as well. The historical data that we touched upon, we ran that historical search from last week, and I showed you what was available, what positions were there, so you knew I wasn't cherry-picking in that little portfolio I have. Let you in on a little secret. I kind of was cherry-picking because I was looking at those 3 positions to open up RPMs in before the webinar last week, and I did actually open new RPMs on the 5th of February on Talisman Energy, the one that hasn't moved, of course, right, and on CarMax as well, and I'm still looking for a different buy point in Valero. I think I might have missed it for what I was looking for, but I might still get into it. But historical data is not included on the 20-minute delayed in the real-time service. The historical data, you can have a 3-month subscription for $99.95. But if you're already on the real-time, it's just cheaper to go to the professional level of service. Professional includes everything on the real-time, but with the unlimited access to the historical suite of tools. All right. We're going to handle some of the questions that come in here. If you guys start writing in questions, I'll go ahead and handle those, but I just want to remind everyone that the final presentation for this Power Options for Radioactive Trading webinar series is next week, Wednesday, February 23rd, 9 p.m. Eastern Time. I'm going to have that selection up on the main page there to register for the webinar tomorrow morning, maybe even this evening if I get to it, okay? That's just going to be an open discussion on, let's just say it, open discussion on anything we've discussed in the past 4 webinars. Really, I'd like it to focus on just the portfolio tools or maybe some of the research and analysis questions you have, but let's just throw it all together. I might actually increase the time on this, and we're already going to 10:30 as it is. This final Part 5 open discussion on analyzing or just open discussion on the past 4 webinars, I might actually reschedule this to be from 8:30 p.m. Eastern Time to 10:30 p.m. Eastern Time, so we have 2 hours of scheduled time for question and answers on Part 5 of our presentation. All right. Of course, there's always continuing education on the Power Options tools, radioactive trades. We may continue some of those in March as well. Don wanted to know, it's a little bit overwhelming. You'd love to have a one-on-one session. Don, that's great, but you also mentioned that from Canada, can't use the 800 number. When you sign up for one of those coaching sessions, you can put in to have me call you at your number. So it'll be on my dime anyway. You can't use the 800 number. Just put in your telephone number, and I'll call you at the scheduled time. Love to have a one-on-one session for you. Ooh, Wanda wanted to know, thank you. Can you print the portfolio analysis? Hold on one second. Let me go back. Some of those features do have a printer-friendly version. I don't know which analysis you mean. Wanda, do you mean if I linked to the position analysis menu here from the more information button looking at this? Hold on one second. Are you referring to this analysis? Okay, Marilyn says, or Mark says, yes, you can, but it's not built in. What I'm trying to figure out, Wanda, are you talking about this page here, which, as Mark mentioned, I do not think this has a printer-friendly version on it where you can look at this evaluation. You may have to print the screen and then print the screen and print it in segments. The basic positions, you mean the profit and loss portfolio that we had from the beginning, Wanda? No. Do you mean this here? Just the profit and loss portfolio where it shows your open positions? Yes, okay. There's a way to print it, but there isn't a printer-friendly version here. But what you can do, and this is what a lot of my customers will do, is they'll check this box to email the portfolio daily. So when the email receives you, you can print it directly from the email that comes through. Okay, Don, that sounds good. Just let me know. Okay, so Wanda, I hope that answered. Okay, yeah, thank you. That answers your question. What I also thought you were referring to is one of the things I like to mention. Very quickly, let me navigate back. I'm going to change portfolios very quickly. I'm going to go to something called My Married Puts, and these are not actually My Married Puts. It's just a portfolio we created for the various webinars when we're showing different positions. As you can see, I have some of my alerts triggered. What I didn't get to show tonight, and I apologize for that, let me see, do I have a position in here that did that? What, I don't? I thought I did. I thought I had a position here where I had done RPMs and adjusted the cost basis after doing a couple income methods. But let me just quickly link to the historical reports. This is what I was referring to earlier. I've selected to view all positions, but I can toggle just between realized gain or loss or unrealized gain or loss. And you notice that all the positions here actually are newer positions, so I haven't closed any of them yet or made any adjustments. Let me go to a different portfolio, show a better view. Oh, I know why. Let me go to 2010. How about that? There we go. All right, sorry about that. So I go back to 2010. You see I have some realized gains and losses on eBay, further down on Abbott Labs here as well. This is just organizing it based on the close date for the position or if it's still open. I've got a lot of stuff here for this portfolio in 2010, different positions where you see the realized gain. Now, as I mentioned before, one of the things I prefer to do, this is great for tax season, by the way. This is why Ernie designed the historical reports is for tax season. What I prefer to use is this analysis report when I'm looking over my RPMs, and the reason why, as you can see, it's now organized by stock price. So I can see all the positions I had on Abbott Labs. all the positions I have on Altera. If it's highlighted in red, that means the position is still opened. Those that aren't highlighted, these are all the closed positions. Okay? So I don't have one that has a mix in it right now, but this is showing me the open positions still in red, and the ones that aren't highlighted are positions that I closed. And you can see here, okay, we had some adjustments with the put on McDonald's and the 75 call on the position. So I'm seeing the total rolling listing here for each one of the positions that I closed over time, okay, and the different transactions that I made. All right, so that's the view that I like to use. And of course, very quickly, the allocation. You can play around with this if you want to in the allocation menu. You can analyze by investment amount, position value, or number of positions, and you've got your little neat charts showing you, consumer goods and what percentage is in financial, healthcare, and so forth. And then it has it broken down for you by listing as well. The allocation view is a little bit more important than I'm giving it time for, but I really wanted to get through mostly the analysis of the income methods and the other menus. Richard wanted to know, has the blueprint been updated since the 6th edition? We're currently on the 8th edition, and I believe Ernie is looking on things to use for the 9th edition. Okay, and Marilyn points out the embedded graphs don't print. Okay, that's interesting. I'll talk to the programmers about that, Marilyn, and see if I can get that to work a little bit better for you. Okay. Oh, sorry, Richard, I just hadn't got to your question yet, but yeah, we're currently on the 8th edition. Okay. Oh, okay, and Marilyn, it's great to see you here from Australia, from down under. Thanks for joining us, and I try to do some of these evening presentations. We're probably going to be doing some in March, but I'm actually going to be out of town for about a week in March. That might put a damper in that. But remember, most of the webinars that I do in the evening are going to be recorded and archived in the Learning Center menu as well. Richard, that is something that I will have to talk to you offline, possibly tomorrow. Please send me an email to support@powerop.com, because honestly, off the top of my head, I don't know what the main significant differences are between 6 and 8. I know there was how do I want to say this? There was a secondary sort of discussion or secondary adjustment that could be used on income method number 4 that I believe was added that wasn't in income method number 6. I believe a more detailed discussion on income method number 8A and 8B that I worked on with Ernie was added into income method edition number 8. I'm not sure what else is of value there. And I actually believe, Richard, that you can just send me the email to support@powerop.com. I probably won't get back to you tonight, but I'll be able to get back to you tomorrow. And because you have edition number 6, you should be able to get the PDF documents to update what was missing between 7 and 8 right from your free registration account at radioactivetrading.com. Speaking of emailing me, hey, I want to put that up. All right, ladies and gentlemen, let's wrap this up. So if you have any questions, think of any questions later on, go ahead and send me an email to support@powerop.com. Remember, if you live inside the continental U.S., you can reach us toll-free during market hours at 877-992-7971. Or if you live outside the continental U.S., as Don mentioned up there in Canada, you can just call the office at 302-992-7971. Or if you want to, send me an email. If you guys in Australia, Maryland, for example, you guys want to get up early in the morning when the market's open and you want to talk to someone on the phone, send me an email and we'll call you internationally and we can have a discussion there so it's on our time as well. Whew. I know I'm tired. I don't know about you guys are. I don't know if I've hurt anyone's brain with what we reviewed today or if we just went through a little bit too much, but I do appreciate you guys coming and joining me this evening. I know it's important. We want to make sure that you're comfortable using the tools, and I appreciate you spending the time with me tonight for a little bit more than an hour and a half to go through the portfolio tools. It's a great, powerful tool, not only to track your positions and see where you stand. I can't emphasize how important it is to have that view in the position analysis to be able to see what you're doing. What is my position going to look like when I make this adjustment or perform this income method? Does it match my SIGA model? I really think that the I really think that the management of the position is almost more important than opening the position to begin with. But hey, opening the position that you're comfortable with and that you feel is going up is important as well. Ladies and gentlemen, I hope to see you all again next week, Wednesday, February 23rd. I'm seriously thinking about starting at 8:30 and wrapping up at 10:30. Any questions you have about the past 5 presentations or the information in the blueprint, we'll handle those there in the open discussion format Wednesday, February 23rd at 8:30 perhaps, or 9 p.m. Eastern Time. Have a good evening, ladies and gentlemen. Have a great expiration. I hope all your trades work out well for you coming up on Friday, and I hope you find some new positions using the Power Options tools after Friday expiration going forward to March, or find some great income methods for your RPMs. Good night. We'll talk to you soon. Take care.